All right, joining us right here is the chief economist of IMF, Ms. Gita Gopinath. She does India proud, and I keep saying that over and over again. But right now, she's here with the World Economic Outlook. Thank you very much for being with us, and hope you're having a great Davos. The global growth, and you've revised it downwards in your World Economic Outlook. What are some of the challenges, and are you somebody who believes that global growth has peaked in 2018?
Global growth has weakened, and we've revised it down. But to be clear, the revisions are quite modest. It's only 0.2 percentage points for 2019 and 0.1 for 2020. Now, that said, we do see that the risks to a much more sharper downward correction are rising. And some of the big ones are with respect to what the trade tensions and with the financial sector.
You also speak about the US growth, and US for long has been the big engine of global growth. With things slowing down there, and you kind of red flagged it as well, what will this mean for the world at large, apart from the trade tensions that keep resurfacing?
The US is growing at a very healthy rate. I mean, it is still at a cyclical high. But because we anticipate that the stimulus from the fiscal side will weaken this year and next, it was already in our October forecasts in 2018 that the US economy would slow. I mean, that was expected. I mean, job creation in the US is very high. Consumer confidence is very high. The risks are, again, for the US will be on the trade side about whether there is a greater disruption. And the reason that becomes a major issue for the US is that we're now seeing that financial sentiment and trade tensions are getting intertwined. And so the financial sentiment aspect of it can make things more disruptive for the US.
And you talk about financial sentiment pretty extensively in your report, but one other point of bother that's kind of developing for the world is Brexit. A no-deal scenario is what you're working with. How worse could that be, and what will it mean for the region?
We are actually working with a scenario where the UK continues to be in a free trade area. That's what's in our forecasts. And that the transition is relatively smooth. So in the event, if there is a no-deal Brexit and a reversal to WTO rules, then the costs are going to be much larger. At this point, I think the situation can be best described as a large amount of uncertainty on both sides, because while there's a possibility of no-deal Brexit, there's also a possible of reversal of Brexit. In either case, a very high level of uncertainty just weighs negatively on investment, something we've already seen for UK.
Markets and I think economies hate uncertainty. Talking about China before I move to India, China's economy, and there's a lot of debate about its slowdown, but at a $14 trillion nominal GDP, isn't 6.6 or 6.5% perhaps the new normal, and the world needs to make its peace with it?
This was in our forecast from last October, that the Chinese economy would grow at 6.6% in 2018 and then slow down somewhat in 2019 and 2020. So that is very consistent with the mature stage of the Chinese economy, and that is consistent with China rebalancing away from industries towards services. So that is not the news over here. The news would have been if there was a bigger correction, but we haven't seen that.
And you don't expect that either? Not a crash landing?
The risks does remain, and it depends a lot on what happens with the trade discussions. That is an important factor. But again, at this point, we don't know where that'll end.
And you have underlined it as a risk factor for the global economy as well. Talking about India, your outlook says that India growth is projected to pick up in 2019. What could the tail as well as the headwinds be? Because for very long now, India has been a one-engine economy. Consumption has been the mainstay. Can it continue to throttle growth, really?
So India, I mean, remains one of the fastest growing large economies of the world. And it is one of the few countries for which we have our estimates actually point to an increase in growth rate for 2019. There are two reasons why we've increased that we expect the growth to go up. We've revised our forecast upwards. One is because of the declining commodity prices, which helps India. And the declining commodity prices also makes it easier for the RBI to have a fairly neutral or accommodative monetary policy. So both of those get factored into a higher forecast for India.
Before I go any further in the fiscal and the monetary space, I think we're also speaking at a time when there's going to be election year in India. I don't want to get into the politics of this, but a government is going to seek a re-election. The opposition will obviously not want that. But in terms of the last 5 years of the Modi government, what would you believe, how would you assess the performance? What have been some of the key achievements according to you and perhaps the laggards?
There are a few accomplishments of this government. The goods and services tax is an important one. The bankruptcy reform is an important one. The setting up of the inflation targeting framework is a very important one. And we've seen an improvement in the ease of doing business. So those were all good measures that were taken by this government.
And what would be some of the concern points? People believe perhaps the agrarian stress or the lack of jobs, not just for this government, but for the economy as large, pose a threat. In an election year, do you believe those become more important?
These are two sectors for which we continue to need to do a better job, both on the agricultural side and on creating jobs. There can't be quick fixes like loan waivers. The skilling programs, the state-sponsored skilling programs, have not worked that well, and maybe we need to have it done more with the private sector in terms of firms providing in-house training to workers. That would be a better alternative. On the agricultural side, there is obviously a lot of distress on the farmers, and I would think that a more cash transfer-based approach rather than farm loan waivers or input subsidies would be much better.
If I can ask you a question, and you talk about fiscal correction, and I think I've mentioned that your outlook also talks about that. Fiscal correction is something that everybody is looking out for. If the budget does make room for an agri-relief package, do you believe it's going to be a rational move? Will markets understand that and not treat it as a populist measure?
It is important for India to stay the course on the fiscal side. I mean, fiscal consolidation, if you look at the aggregate deficit for India, which is combining the center and the state, that hasn't improved much in the last 5 years. So that is something that needs to be addressed. Now, this is, of course, a pre-election year, but it is very important that India kind of pays very close attention to the deficit and stays within target.
On that note, thank you very much for speaking to us. Always a pleasure.
Thank you, Supriya.